All right, let's get right into this. So picture this. You're this small, really innovative company, and suddenly the biggest player in your entire industry, Alcon, decides they want to buy you. I mean, that's the dream, right? The ultimate validation. But then, after a whole year of waiting and planning, the deal just evaporates. Well, that is exactly what just happened to the medical tech company LENSAR. And there you have it, straight from the top. That's LENSAR's CEO, Nick Curtis, basically spelling it out for everyone. After a full year of work, a ton of money spent, the massive acquisition by the industry giant Alcon is officially off the table. And that phrase, mutual pragmatic decision, that tells you this wasn't just some disagreement. It was a surrender. So this brings us to the big question, right? What happens now? When you get left at the altar like this, is that the end of the road for a company like LENSAR? Or could this actually be the start of an incredible comeback story? Let's break it all down.
Okay, to really get what was at stake here, we've got to rewind the clock about a year and see what this deal was supposed to be all about.
The announcement back in March 2025 was just huge. Alcon, they are the undisputed leader in eye care, and they wanted to buy LENSAR. This wasn't just about the money. It was this giant public stamp of approval. It said that LENSAR's core technology was the real deal. And that technology is the key to this whole story. It's called the ALLY system. You could call it LENSAR's crown jewel. It's this next-gen robotic laser for cataract surgery that's designed to be faster, smarter, and just way more efficient than anything else out there. This machine, this is what got Alcon's attention in the first place. So why did it all just fall apart? Well, the answer is pretty simple. Regulators. The U.S. Federal Trade Commission, the FTC, basically signaled that they were going to block the merger. And it seems like no matter what both sides tried to do, the FTC just wasn't going to budge. So the deal was dead. Now let's talk about the damage. Because being stuck in that kind of acquisition limbo for an entire year, well, it took a really serious toll on LENSAR's business, especially when you look overseas. So what does that damage actually look like? Well, look at this number. 1. That is the number of ALLY systems LENSAR sold outside of the United States in the entire last quarter of 2025. Just a single unit. You see, international distributors, they were totally uncertain about what their future would look like under Alcon, so they just stopped buying. And this chart just says it all, doesn't it? Take a look. In Q4 of 2024, before all the merger chaos, they sold 10 systems internationally. Fast forward 1 year. Right in the middle of all that uncertainty, that number just plummeted to 1. The momentum they had built came to a grinding halt. And it wasn't just about lost sales. You have to factor in the direct financial cost. This failed merger process ended up costing LENSAR a staggering $17.1 million in 2025. For a small company, that is a massive, massive hit to the wallet. But just when things are looking their bleakest, this is where the story takes a really interesting turn. Because mixed in with all that negative fallout, there were some surprisingly positive financial twists for LENSAR. So check this out. First off, LENSAR got to keep the $10 million merger deposit from Alcon. That's huge. Then, their own advisors actually wrote off $4.3 million in fees they were owed. And to top it all off, another $5 million payment they had to make got pushed all the way back to 2027. All of a sudden, the company had this critical financial cushion. So with a little bit of breathing room financially, we can actually look past all the merger drama and see how the business itself was doing. And what you find is a company that wasn't just surviving, it was quietly doing pretty darn well. Even with all that uncertainty swirling around, LENSAR still ended 2025 with about 200 of its advanced ALLY systems installed out there in clinics and hospitals. That is a crucial number. It shows you that doctors are actually adopting this technology. And that number isn't just sitting there. It grew a lot. We're talking a 48% increase from the year before. Think about that for a second. That is incredible growth, all happening during a time when the company's future was completely up in the air. And all that growth, it adds up to real market share. In the super competitive US market, LENSAR grew its share of these laser cataract procedures to over 23%. The big takeaway here is that they are going head-to-head with much larger competitors, and they are actually winning. Now, here's what's really interesting about this business. It's not just about the one-time sale of the machine. The real power, the secret weapon, lies in its hidden engine, this predictable, high-margin stream of recurring revenue. Let's look at the data. This is right from their Q4 press release. This table shows you exactly where LENSAR's money is coming from. You can see the line for system sales, sure, but look below that at recurring revenue. That comes from procedures, from leases, and from service contracts. And this chart just makes it crystal clear. That whole complex table, it basically boils down to this. In the fourth quarter of 2025, a whopping 79% of LENSAR's revenue came from those stable, predictable, recurring sources. This is the engine that kept the company strong through the entire storm. Okay, so the deal is off. The company has a financial cushion, and it has a surprisingly strong core business. So the question is, what's the plan? How do they get back on track? Well, their strategy moving forward is refreshingly simple and focused. No fluff. Number 1. Accelerate that revenue growth, especially by getting those international distributors fired up again. Number 2, maintain the cost discipline that got them through this tough period. And number 3, enhance their cash flow to fuel all that future growth. And if you really want to understand the mindset inside LENSAR right now, just look at this quote from the CEO on their earnings call. It's not just a statement, it's a defiant declaration. After a year of being on the sidelines, LENSAR is sending a message: we're back. Which leaves us with this one final thought. Here you have a company whose technology was so good, the biggest player in the world tried to buy them. Now they're being forced to stand on their own 2 feet, but they've got the validation, they've got the financial footing, and they've got this renewed focus. So the question is, can they turn what looked like a total disaster into their greatest success story? Only time is going to tell.